Shares in the business empire of Asia's richest man Gautam Adani nosedived Friday, extending this week's losses to $45 billion, days after a U.S. investment firm claimed it had committed brazen corporate fraud. Adani, 60, began his week the world's third-richest person but has tumbled down the rankings to 7th on Forbes' billionaires tracker after losing $24 billion in Friday's trade. His flagship Adani Enterprises plunged 15% in Mumbai after midday, a fall of 508.45 rupees, $6.23, triggering an automatic trading halt alongside 5 of its 7 main listed subsidiaries. Obviously this is panic selling, JM Financial's equity research chief Ashish Chaturmohta told AFP, adding that traders were creating fresh short-sell positions to protect previously made bullish bets on Adani stocks. Hindenburg Research this week alleged in a report that Adani Group had used undisclosed related party transactions and earnings manipulation to maintain the appearance of financial health and solvency of its listed business units. But the conglomerate said Thursday it was the victim of a maliciously mischievous reputational attack by Hindenburg just as it was preparing for a major fundraising round. Legal chief Jatin Jalundwala said in a statement that Hindenburg's short position in the firm, announced in the report's release, was proof the company had a vested interest in driving down Adani stocks. Adani was exploring its punitive action against the research advisory in U.S. and Indian courts, he added. Hindenburg responded that Adani had ducked the issues its research had raised and instead resorted to bluster and threats. If Adani is serious, it should also file suit in the U.S., the firm said in a statement. We have a long list of documents we would demand in a legal discovery process. Shares in Adani business units have soared as much as 2,000% in the past 3 years, adding more than $100 billion to its founder's net worth and vaulting him up the ranks of the world's richest people. Adani, who now has an estimated fortune of $95 billion, is considered a close supporter of Prime Minister Narendra Modi. The report said a pattern of government leniency towards the group, stretching back decades, had left investors, journalists, citizens and politicians unwilling to challenge the group's conduct, for fear of reprisal. The issues strike at the heart of the Indian corporate sector scene where a number of family-controlled conglomerates dominate, Gary Duggan, chief executive officer of the Global CEO office, told Bloomberg. By their very nature they are opaque, and global investors have to take on trust the issues of corporate governance. Its allegations come as an ambitious $2.5 billion follow-on public offer, India's biggest ever, opened for bids on Friday, aimed at bolstering the business empire's balance sheet. The report is 100% unsubstantiated, market analyst Arun Kejriwal said, adding that Hindenburg is looking to make money with its short position in Adani. It is just a compilation of old news at a time when it hurts them the most, Kejriwal said. The more scandalous they make it, the more damage it causes. Shares in Adani Enterprises fell to 2,720.90 each at its lowest point in the day, below the FPO price band of 3,112 to 3,276 rupees per share. Hindenburg's report accused Adani Group of engaging in a brazen stock manipulation and accounting fraud scheme over the course of decades. It claimed Adani's elder brother Vinod managed a vast labyrinth of offshore shell entities, in tax havens including Mauritius, Cyprus and several Caribbean islands. The Mumbai Stock Exchange's benchmark Sensex index was down 1.8% on Friday afternoon, primarily dragged down by the Adani rout.